name's Andrew Betwain. I'm the editor of InsuranceInvestor.com. Today I'm joined by Aileen Mathieson, Group Chief Investment Officer at Aspen. Hello, Aileen. How are you?
Oh, hi, Andrew. I'm great, thanks. How are you?
I'm very well. Thank you for joining me. So Aileen will be speaking at our Insurance Investor Live Europe 2022 conference on November the 3rd in London. She'll be speaking on a panel discussion about the outlook for real assets, infrastructure and public-private partnerships. What are the drivers and the risk in real assets investments going forward? So Aileen, big topic there, lots to discuss. I want to start us off with something that's a bit broader. Can you discuss the trends around the real asset market in 2022, especially around the current market conditions with this horrendous inflation we're experiencing and also the higher interest rates that are happening?
Sure. So obviously, all the investors just now, we're all sort of battling with investing against a background of increased volatility, increasing interest rates, and growing inflation. The fixed income and the equity markets are pricing in, the likelihood of a recession, albeit the risk of this seems to be diminishing in perspective, but it's there nonetheless. So from that perspective, investing in real assets, particularly real estate and infrastructure, are particularly well suited to this environment. Obviously, infrastructure and real estate give the added benefit of being able to be paired alongside ESG themes. So those are the two asset classes that I can definitely see have been benefiting from increased allocations over the last 12 months or so.
So how is this area of investment changing? You've mentioned a few examples there, but is it growing? Are there new aspects opening up to the asset class as time goes on? What's happening in it?
So at Aspen, we outsource all our investment management to third-party asset managers. And if I consider some of the ideas that have been brought to us in recent months, clearly there's a big focus in commodities from that perspective. And I've seen more offerings from the perspective of bespoke commodity benchmarks. So, for example, ones that are particularly focused on protection against inflation, making the most of, particular price increases or particular ESG themes. So we've seen that. Interestingly, forestry, which has long been favoured by institutional investors and particularly pension schemes, is also becoming more prevalent in some of these ideas, particularly thinking about some other associated agricultural aspects with those investments. And then the other, obviously, different factors within real estate, some of which I've seen in the past more in the UK and Europe, are sort of coming into the investment universe within the US in perspective, for example, social housing or student accommodation.
Obviously, social housing is a big thing, and we hear a lot. So that's going to be a really interesting asset class to watch. So I wanted to switch to the other aspect of the panel discussion, which is the public-private partnerships. They've obviously becoming increasingly common around the world and lots of different places using them in slightly different ways. What do they offer investors in this space, and are they changing with the market as it's progressing through this current circumstance?
With the ever increasing trend for investors to allocate towards ESG focused investments, public-private partnerships are well placed to be able to provide new opportunities which are complementary towards both environmental and social aims. For example, urban regeneration programs post-COVID will necessarily focus on a wide spectrum of initiatives requiring funding across businesses, across housing, education, transportation, health and wellbeing initiatives, which need to be delivered as part of a comprehensive package. No one element of these can be successful on its own without the other parts of the programs. However, within some of these, some parts of the package will necessarily need to be funded by public finance due to the higher risk profile, the longer payback period, or the lower financial return which these offer. However, other aspects are more suited to institutional investors' needs. being able to blend public and private finance now in this way means that there are now more investment opportunities, which can be much more impactful than in the past. However, the challenge with these initiatives is often practical with regard to how to facilitate the access by the public sponsor to the private finance in a structure that can be invested in. And that's where I believe the asset management community could play a valuable role with moderate fees.
So that's really interesting, and thank you for all that the interesting insight about aspects of private partnerships. Public-private partnerships don't often get covered. So my final question for you is, looking forward to 2023, what will we see in this area, and what do you think will be the most important aspect of it?
So, I mean, I guess when we all look forward, you know, the credit and the equity markets, you know, are anticipating that there might be a recession. So, but there is that uncertainty. You do have the continued heightened inflation and interest rates expected going into 2023. So that environment was favors those that are also you know, positively impacted by inflation. So I would expect that real estate and infrastructure will continue to be favoured asset classes in 2023 and beyond, and particularly going back to the point of social investing and public-private. I think there will be even more opportunities to be able to, and I hope there will be more opportunities for institutional investors to be able to participate in these more comprehensive programs.
So thank you very much for your time today, Aileen. As I mentioned, Aileen will be speaking at our Insurance Investor Live Europe conference on November the 3rd in London. You can hear her speak about her beloved public-private partnerships, and I'm sure she'll have many interesting insights. So thank you very much from me, Andrew Twain, editor of insuranceinvestor.com, and thank you for Aileen for your time.
Thank you, Andrew.
Thank you very much.